Had their worst year since 2008 as the average family lost $4,000 to $5,000 in real take-home pay in 2022 amid high inflation. That's according to the Heritage Foundation. The Dow ended the year Friday down 9% compared to the previous year. The S&P 500 fell 25% and the Nasdaq dropped a whopping 35%. So what caused markets to sputter and what can we expect in 2023? Let's bring in Gene Marks. He's the president of the Marks Group and a small business expert. Gene, thanks for joining us this afternoon. What do you expect for markets coming up this year, especially when you've had such dramatic losses over the past year?
Rich, thanks for having me on. Yeah, I really don't think that markets are anywhere near their low point. And I hate to be the bearer of bad news as we head into the new year, but I do think we're going to be seeing at least the next 6 months of some really tough and challenging economic times. You know, when I talk to my clients, they're suffering, the exact same things that you've been reporting about now for months, which is, higher than expected and manageable inflation, difficulty in finding employees. And I'd say the other thing that's going to be a whopper for a lot of businesses, particularly small companies that I serve, will be interest rates. They have ticked up significantly the past few months, and I think we're going to be seeing the impact of that in 2023.
Yeah, that has an awful lot to do when you want to expand your business and you want to borrow money to do it. It's a heck of a lot more expensive than it was just a year ago. There's also a Wall Street Journal headline saying that companies are offering big raises now to retain their employees to keep up with inflation. And by the way, that feeds back into inflation if people are making more money trying to keep up with inflation. What does that mean for small businesses and companies that are trying to keep up?
A huge challenge for small businesses. I mean, as you know, a lot of small businesses can't really keep up with what a lot of big companies and the government offers in higher wages. So they have to be a little bit more nimble than that. But you know what? Never underestimate the power of the American entrepreneur, Rich. My clients that are small companies, retailers, restaurateurs, small mom and pop kind of businesses, they find different ways to compensate their employees. They offer more time off. They offer more flexibility. Working for a small business does come with its advantages, but they're absolutely going to be challenged in 2023 trying to meet some of these pay increases that a lot of employees are really going to need to keep up with inflation.
Some of these pay increases are coming as a result of market forces. Some of them are coming as the minimum wage has increased around the country in many places. Take a look here. Montana is the lowest state now with $9.95 an hour with these increases. Washington State, the highest at $15.74 an hour. Just a quick look around the country. When you look at that dynamic, what other dynamics do small businesses face and challenges do small businesses face as they head into this year?
So people underestimate the impact that a minimum wage increase has on a business's overall expenses. And by the way, I'm a supporter of if you want to increase the minimum wage, let's handle that at the local level rather than the national level. You know, why should the same business pay the same minimum wage in Kentucky versus California? But regardless, Rich, just think about it. If you're running a business and your local minimum wage goes up $1 or $1.50 an hour, that has a knockoff effect on all of your wages. Because the employees at higher levels, they want to make sure that they're still making the same relative amount that they were making versus the entry-level people that are making minimum wage as well. So when a lot of people argue for minimum wages, they always say, well, it's going to supply, that kind of compensation for lower income employees, which is fine, and I get that. But I think people have to realize that it has an overall impact on an entire business's overhead, puts a lot of pressure on people to raise prices, maybe cut labor, invest in more technology. It's a lot of decisions businesses are going to have to make this year.
And there's been major changes in the U.S. economy structurally since the pandemic and now after the pandemic. You have businesses closing downtown, businesses opening up outside of downtown areas. Your smaller businesses that are in the core downtown areas, are they seeing a return? Do you think this is a permanent shift outside of the downtown? What can small business owners expect as they look to this changing landscape?
I think they have to be really realistic. I live in downtown Philadelphia, so I walk around the city all the time. The numbers in Philadelphia are that the back to office workers are back about 80% of what we were pre-pandemic. And I mean, come on, you know what the reality is? More people are going to be working from home. You're not going to have the same amount of traffic that you had before 2020. So if you're operating a deli or a dry cleaners or a newsstand or repair shop and you're really relying on that lunchtime crowd, you really have to prepare yourself for the fact that your revenues are never going to be able to catch up to what they were before 2020. The work from home trend, I think, is permanent and it's here to stay. And to your question, a lot of those small businesses in downtown areas are going to have to figure out a different way of doing business. It might put some of them out of business permanently.
Gene Marks, thanks so much for joining us in this early part of 2023. Much appreciated.